Well, today is Cinco de Mayo.
That means it's May the 5th.
That means it's May the 5th, and
Okay, got
our
it.
long-standing tradition of drinking shots of Cinco de Mayo in the morning we've been continued to do that. So
No,
no,
we haven't.
no. But anyway, happy Cinco de Mayo, and hopefully if you get out and go to restaurants tonight, you have a good time. Good time. Speaking of, that's a nice segue into yesterday. We were talking about a bear trap today on our show on WTOB. And yesterday is a great example of what a bear trap can be. Talk a little bit about what that is.
Bear trap is a terminology that in a bear market, and think of trends. Think of since the first year, where the trend line is going in the stock market, in the NASDAQ, in the S&P, and the Dow. It's a downward trend. Well, then all of a sudden yesterday or a day, you have something that happened yesterday that what happened was the Federal Reserve Chairman came out and pretty much said 75 basis points is off the table, and that created enough excitement and thought process that, hey, boom, the market pops and it goes up, but today it's back down and there's a bear trap, something that creates excitement that doesn't change the trend line.
Yes, and as you just said, today, at least this at 10:19, on Cinco de Mayo, the markets are down. So I think that's a very short-lived kind of a little bit of injection back into the markets. But I think that we'll get back to the patterns until the midterms. We keep talking about midterms, and once we get through those, we should see markets firm up a little bit more. But meanwhile, we do have a lot of cash still on portfolios, and our game plan on that is to get through what the Fed's going to do in June, which will be probably another 50 basis point increase. Then we're going to look at individual bonds as purchasing those within portfolios. We'll give you more information as we get closer to the June meeting. But we're going to be buying individual bonds because they're not nearly as interrupted by rate increases, because you know what you're going to get back with the coupon that you're getting. You know what you're going to get back when it matures, and these bonds are going to be very short-term in nature, and we may even ladder some of them.
I have already done it one time for one client that the situation warranted, and we were able to go a ladder of 1 year and 2 year, and our average yield is in the 2.83% area, and we were able to buy them right at par. So again, going with what Gib just said, we think with another point increase, we can squeeze that up into the threes, maybe the fours, but probably threes. Yeah. But with that being said, we could then provide some stability in the portfolio. We could walk our way into next year, and if there's a recession, have money coming available at that point in time to make good decisions with. So that's where we are.
Because right now in cash, we're not losing money, that's for sure. But at 0.02% or whatever the rate of return is, we're not getting much. So we can get a much better rate of return on what we have deployed in cash right now, and that's our reasoning. And then we don't have, with a bond fund, we don't have the ups and downs that bond funds have when interest rates do go up.
Our choices that we have been making in equities to be in value, to be in dividend-paying positions, to be in energy, to be in consumer staples are doing well. They're holding up and providing yields that are good in that, so we feel good about that. And then, again, buying opportunities are there, and we're evaluating that as we review portfolios.
As you get your statement from April, it's going to be ugly. The S&P 500 was down 8.25% in April alone, so our portfolios didn't have that much off in 1 month. But you are going to see
you're going to see it down, but it's not the near what the market is,
correct.
And we feel good about that. Well, anyway, if you have any questions, if you'd like to give us a call, we'd love to chat with you. We can talk, we can Zoom, we can even meet, and we are meeting with a lot of folks. So give us a call and stay tuned, and we're going to work our way through this. And happy Cinco de Mayo.
And always remember, it is your money.
And your money matters. See you next week.